Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 10th of December 2021. Alright everyone, a lot to get through today. As you can see from my Twitter tabs, so much happened. I woke up and it was just a flurry of information that I had to kind of catch up on. So first things first, the latest network upgrade for Ethereum, Arrow Glacier, went live today or yesterday, depending on when you're listening to this. As I've mentioned before, this network upgrade just pushed back the difficulty bomb to June 2022. Didn't include any other kind of like EIPs besides that one there. And the next network upgrade will be either the merge or that EIP 4488, that kind of like making rollups cheaper network upgrade there. Now, I would say there's a much higher chance that the merge is next. I'm still kind of sticking to my Q2 estimate. Q2 2022 estimate there, but we're going to have to see. We're going to have to see how that kind of like shakes out there. Going to have to see what the community wants more, whether it's the merge or cheaper rollups. I'm kind of torn. I've said before that I actually really would love to see this kind of like 4488 go live, even if it delays the merge by a couple of weeks. I'm not too kind of like fussed, but I know that other people are. I know a lot of people think that we need to do the merge ASAP, and if we fail to ship the merge probably even by mid next year, it's going to be kind of like a really big deal. And I agree with that for sure, but I think we can do both. I think we've got a good enough process in place, and I think the core devs are good enough for us to be able to do both. But we'll see. We'll see how it shakes out. We'll see what people want to do. But it's either one of those two that's going to be part of the next network upgrade there. Anyway, moving on. So this happened just after I recorded yesterday's refuel, so I didn't cover it yesterday, but I will cover it today. I did mention that Ross Ulbricht was doing NFTs, raising money for prison reform. So the FreeRoseDAO that was spun up to kind of like, raise a bunch of money and then bid on the DAO actually won the auction for Ross's NFT. So they ended up raising over 2,800 ETH in just a week, which is over $12 million, sorry. And they won the auction with about half of what they had in the treasury, which is pretty cool, right? So they got a thread, going over how it all happened, the fact that people are going to get Ross tokens to have governance over this sort of stuff, and all the information's in this thread. You can go check it out. But this is awesome. I mean, again, it just shows the power of kind of like DAOs and of kind of like worldwide, coordination of both capital and kind of like financial capital and social capital to do something that's for the greater good. I guess like the first one was more speculative with the Constitution DAO, and that wasn't the first one. I'm talking about like the first big one. Whereas with the FreeRoseDAO, it has like a more kind of like utilitarian mission behind it. You can see here they actually list the three things that they're going to be focusing on as part of the FreeRoseDAO. Obviously, their vision is to free Ross is the first thing. Second thing is advance prison reform. And 3, share Ross's work with the world and give everybody an opportunity to own it through kind of like the token. And there's kind of like a bunch of multi-signers on here as well, well-known people in the community, such as Kobe. Everyone knows Crypto Kobe from Up Only. You have Cryptopathic, who's a pretty big ETH bull. You have Jamis here from PlizzDAO and a bunch of others as well in this list here. So definitely really cool to see this. I think it's a great cause and awesome to see that they won the NFT with over $6 million, and they've got a treasury now to do a bunch of other stuff, which is always really cool. So yeah, awesome to see that from the FreeRoseDAO here. All right, so I think one of the biggest, if not biggest, announcements from the last 24 hours was Polygon announcing that they have acquired yet another ZK startup in a $400 million deal. So they bought or acquired Mir Protocol here, not to be confused with Mir Protocol, which is part of the Terra ecosystem. I saw a few people kind of confusing that. But they've acquired them and they've kickstarted a team called Polygon Zero, which is their third ZK team. They have the Polygon Hermes team, Polygon Maiden, and now Polygon Zero. Now, Polygon Zero has a bit of different tech compared to Hermes and Maiden, and of course Nightfall as well, which is kind of like their hybrid there. So Polygon Zero is a kind of like a Ethereum compatible ZK rollup, but it's using a new, not a newer form of cryptography, but a different form of cryptography, or a different form of zero-knowledge proofs called Plonky 2, which is a recursive proof system that is, and they listed here, incredibly fast. It does proofs or generates proofs on a laptop in 0.17 seconds. Guys, I can't stress how much to you how like big of a deal this is. Generating the proofs for ZK kind of like rollups and just ZK stuff in general is the most expensive part, and it takes a long time because of that. It's expensive. It takes a while to do it even on beefy hardware. But with Plonky 2, apparently they're able to get 0.17 seconds to generate proofs which is, as they say, the fastest implementation available today of zk proofs here. And of course, it's Ethereum friendly, can support Ethereum transactions, and is practical to verify on Ethereum L1. Now, it's funny because Polygon has so much going on right now. It's actually crazy. Like, look at this. They have like Maiden, Zero, Hermes, and Nightfall as kind of like their roll-ups that they're doing. And people kind of like are often confused. They're like, okay, well, there's so much going on here. Like, what's the point of having all three? Like, shouldn't they just have one? Well, they're all targeting different things. Like, I actually believe we're going to live in a multi-roll-up world. It's not going to be a winner-take-all. It may be a winner-take-most, where kind of like one platform in the long run gets a lot of a network effect, but I don't think so. I think demand for block space is infinite. I think each technology has its strengths and weaknesses. They'll accrue different network effects because of that. And I think what Polygon's strategy is basically to position themselves to take advantage of anything. So obviously they have the optimistic roll-up stuff happening with Nightfall. With Hermes, they have they're doing zkVM work there as well. With Polygon Maiden, they're doing Starks, and with Polygon Zero, they're doing Plonky 2. I think Hermes is using a different kind of like set of cryptography there. I can't remember exactly what they're using, but I mean, Polygon's strategy is really just to cover all the bases, which is, I think, an amazing strategy. And obviously, you guys might think I'm biased because I'm an advisor to Polygon, but I've said it for a very, very long time now. This is why, or one of the major reasons why I joined as an advisor, even though I knew that at the time, the Polygon team didn't have any layer 2s live yet. They had the Polygon POS chain, they had Plasma, which didn't really take off for a variety of reasons, but I kept telling you guys, like, just wait, just watch and see what they do. Watch and see what they do with kind of like ZK Tech and optimistic rollups and just rollups in general. And not only that, but also they have like Polygon Avail, the SDK, the POS chain still, which is, still a good thing. Like, yes, it's not a quote unquote true L2, but it still works for all intents and purposes, and it works really well with cheaper transactions. Obviously, at the trade-off of lower decentralization and security of Ethereum L1, but that is the short to medium term solution. And then the long term solution is obviously these ZK and optimistic rollup things here. So yeah, I guess congrats to the Mir team for getting acquired here. Congrats to Polygon for the acquisition. It's a huge deal, $400 million. It's bigger than the Hermes deal. I think the Hermes deal was $250 million or something like that. I don't know if they announced what the Maiden deal was. If they announced a number there. But this is all coming out of their $1 billion zk strategic fund that they kind of like announced a while ago here. So yeah, really, really cool to see that. Moving on, another update from the Polygon ecosystem. There is the final phase of the governance process to get Uniswap on the Polygon POS chain is now live. So you can go to this link here, which I'll link in the YouTube description, to vote. If you hold Uni tokens, or if you're kind of like delegating to someone, encourage them to vote. And if the vote passes, the deployment is officially approved, which means Uniswap v3 will be deployed to the Polygon POS chain, which is awesome. I mean, it's already on Arbitrum and Optimism. It makes total sense for it to be on the POS chain. Like, I'm surprised it even took this long, but it's great to see that kind of like proposal is moving along very, very smoothly, and it seems like it will pass here. So yeah, I guess like really, really great to see that out of the Polygon ecosystem. Moving on, an update here from Umbra Cash, which is privacy-preserving stealth payments on Ethereum. Now, they have launched the Polygon POS chain as well. So with one transaction, it's cost less than a cent in fees. You can be configured to receive stealth payments on the Polygon network. So, this is in addition to them to Umbra supporting Ethereum mainnet, of course. And I'm sure they're going to be kind of like deploying to, I guess, like Arbitrum and Optimism and stuff like that as well. These sorts of things make sense because doing privacy is definitely more expensive gas-wise. So on Ethereum L1, I guess it kind of makes less sense because of the fact that it's so expensive. And I'm going to talk about another privacy thing in a sec from Aztec. But yeah, it makes a ton of sense for them to be on the POS chain, and then also the other EVM compatible kind of like layer 2s like Arbitrum and Optimism. So definitely go check out the announcement blog post here. I'll link it in the YouTube description. And speaking of Aztec, I spoke about it before. So you guys know Aztec. It is a layer 2 privacy protocol. You can kind of play around with it at zk.money. They're using zkRollups to I guess like your roll-up technology to kind of like bring privacy to layer 2. What they announced today is that Aztec Connect, which is the first private bridge for Ethereum DeFi, is now live on testnet. So you can have up to 100 times gas savings with fully private transactions by default. So the way it works, from what I understand it, is that Aztec allows you to basically do these transactions at layer 2 and these private transactions at layer 2, and it'll tap into DeFi at layer 1. So this is what I'm talking about in terms of kind of the composability between layer 1 and layer 2, and also I guess kind of like layer 2 to layer 2. But what the bridge contract does in with Aztec here is that it takes the aggregated funds that are deposited into it, calls the relevant functions from a DeFi protocol, and then proceeds from that interaction are returned to the rollup contract. So in plain English, the rollup is acting like a user aggregator, which, I mean, rollups technically do this. They just act as like transaction and computational kind of like user aggregators. But in this sense, Aztec's kind of like bridge contract is aggregating all these funds together, allowing users to kind of like do stuff at layer 1, on layer 1 from layer 2, and then bringing it all back, and you can have like private transactions because of this. Absolutely awesome tech here. Like, guys, I mean, I've been talking about privacy for a very long time now and how important it is. And as I just mentioned, Umbra with their stealth payments is live on the POS chain. And Ethereum mainnet, Aztec is now live on testnet with this feature. And I'm sure it's going to come to mainnet much kind of like sooner as well. And they actually gave a comparison between costs as well. So if you were to do this on layer 1 for a basic Uniswap trade, for example, it would cost you $55 and you would get 0 privacy. If you do this on Aztec network and it costs, Aztec network, it's private, like fully private, and it costs $7.50, which is an 86% gas reduction with the privacy, of course. Now, some of you may be thinking, $7.50 is still pretty expensive for a swap, but you have to remember that 1, this is the first iteration of their technology. 2, this is fully private. Privacy, as I mentioned before, costs more to do. It's just a heavier and more gas-intensive thing to do. And 3, the roll-up kind of like costs are going to come down over time as part of, I guess, like the Ethereum L1 scaling too, like ERP4488 and sharding and all that sort of stuff. So the fact that they've been able to get it down to this cost for fully private Uniswap trade is absolutely awesome. I love it. Love what they're doing here. Definitely go check out the kind of like full thread here for a description, and join the Discord channel. You can go kind of like play around with everything here as well. So Arbitrum announced today that they have partnered up with Chainlink, and they're using their kind of like FSS technology to minimize MEV on Arbitrum and to decentralize their sequencer. So they're working with the Chainlink team, of course, to do this. So you can see here, there's the update from Chainlink itself, and they're kind of like detail in this blog post how Arbitrum is using Chainlink's technology or fair sequencing services to kind of like decentralize their sequencer and make their Arbitrum chain MEV resistant. So, this is a pretty healthy blog post here. It kind of like goes through it. There's pretty graphics as well. It'll kind of like walk you through it all. So definitely go check that out. I am not kind of an expert on what Chainlink's doing with FSS here. I do know they have kind of like VRF, which is a verifiable delay function, which is essentially a way to kind of like have true randomness. And by having true randomness, you can create things that are MEV resistant. I think maybe the FSS has something to do with this. Someone's going to correct me, I'm sure. But yeah, it's great to see two powerhouses within the Ethereum ecosystem working together to tackle MEV, but also to tackle decentralized sequencing. Because I've said to you guys before, all the sequences are centralized right now for these L2s. We need to decentralize them out. There's 2 ways to kind of like do that. You rely on altruism, or you kind of like partner with infrastructure providers like Chainlink to do it, and or you issue a token and then get people to run it and kind of like earn tokens. So yeah, both of those things are going to happen. But yeah, great to see this first one kicking off already here. So Optimism have put out a thread today detailing all the projects that have launched on optimistic Ethereum since they went to EVM equivalents I think it was about a month ago now, and they did the OVM 2.0 upgrade. So you can see all the projects here from Poly Network, which is O3 Swap here. You have DForce, Connext. I don't know why these tweets are unavailable. Synapse Protocol, WePiggy. There's a bunch of projects here, like more and more projects going live as time goes on. So just a great thread to go through them. Definitely check this out. It'll be linked in the YouTube description below. I know I'm going a bit fast today, guys, but there's so much to get through. I'm only halfway through here, so I want to get through it all. Robbie Ferguson from the Immutable team. I just realized I've pretty much talked only about layer 2 stuff so far, except the FreeRost and the Glacier thing, which is cool because layer 2 stuff is awesome. But anyway, Robbie Ferguson, one of the co-founders of Immutable, tweeted out today that over the last 40 days, the number of projects actively building on Immutable's testnet has quadrupled. So this doesn't include any of the individual deals, just a frictionless Stripe-like platform that allows anyone to build plus trade NFTs on Ethereum. This is awesome because, as I've said to you guys, once you like on these L2s, once you open it up, give devs the tools they need to kind of like play around with it, get rid of the whitelist, you have just a Cambrian explosion of people and teams and whoever else building on top of you, and they don't need to talk to you as a kind of like core team to do it. Like with Arbitrum, for example, because they don't have a whitelist, no one even has to tell Arbitrum what they're doing. They can just deploy it. It's the same as Ethereum L1, right? Where you don't have to go tell Vitalik or the Ethereum Foundation, hey, I'm deploying this to the chain. Like, it wouldn't even make sense to tell them because why would they even care? You can just do it and you don't have to tell anyone. That's the same with Arbitrum. Optimism still has their whitelist, but I'm sure they'll remove that sooner, rather than later. And then Immutable is in the same kind of like boat as Arbitrum, where anyone can kind of deploy their NFTs or to kind of like the platform, and they don't necessarily need to contact the core team. But of course, in the early days, they probably more likely will because they might run into bugs and things like that. But just generally, they don't need to do it, which I think is the goal. Like the layer 2s, really, the way I kind of like view the layer 2s is that they should be exactly like Ethereum L1 in terms of being able to deploy whatever you want on there, being as decentralized as possible, being as secure as possible, obviously inheriting Ethereum's security and decentralization, being kind of like open, permissionless, censorship resistant, all that good stuff. But they should do it at a fraction of the cost. That's their only goal, guys. And they should be able to be, I should say there's one more major goal. They should be able to experiment a lot more than Ethereum L1. Like I've said before, these L2s will be able to experiment with different kind of like governance modes. They'll be able to experiment with different smart contract languages, virtual machines, all that good stuff there. But at the very core of it, their kind of like main goal is just to make the Ethereum experience cheaper, right? Much cheaper than what it is today. So great to see that out of Immutable here. Next up in the layer 2 news is Lyra has announced that their token launch on Optimism will be going live on December 14th. So I know a few of you have been talking about this in the Discord channel, so I just wanted to give a quick shout out here. They've got a liquidity mining programs being spun up, and they also have community rewards that they announced that I covered on the Refuel. So if you're eligible for that, you'll be getting your tokens on December 14th here. So Cross Protocol has added support from bridging from Optimism to L1 Ethereum. So Optimism users can now benefit from what Cross is saying is the Web3's fastest, cheapest, and most secure bridge to return assets to L1 Ethereum. So just another bridge. I've talked about Cross before, like plenty of times at this point. I remember saying that I thought Cross was really cool because they were innovating on at the kind of like bridge level here. But great to see them support another layer 2 network in Optimism. And speaking of bridges, Hot Protocol also announced that they've reduced their fees for their Ethereum to Optimism transfers by 30% by leveraging the OVM 2.0 upgrade. So it's now cheaper to send funds to Optimism using HOP than the native bridge, and you often get positive slippage on top. That's awesome. And what this means in plain English is that Optimism obviously has their native bridge, which you can send funds to. And kind of like we've all used that probably at this stage, but HOP is actually cheaper than that. Obviously, there's a trade-off here, right? It's a different kind of like thing going on. HOP is like a cross-chain exchange, whereas the official kind of like Optimism bridge is just built directly into the L2. It is, that's probably the safest way to bridge in. But if you're concerned about costs, obviously because layer 1 bridging costs are quite expensive, you can use HOP here, and it's now 30% cheaper to do so, which is a pretty big improvement, right? Like, I know it may seem small, but 30%, really. I mean, if it cost you kind of like $100 before, just as an example, reducing it by 30% means it costs you, oh man, I'm going to screw up the math here, aren't I? Let's just say it costs you $70 or something like that. I think it might be less than that, or maybe I'm not, maybe not. Maybe I'm just second guessing myself on the math there. But I was never really good at math, guys. But it's still a pretty big reduction, right? So any kind of like extra juice we can get out of kind of like these efficiency improvements here, the better. All right, last up here, I think in the L2 news is this website called zkRollups.xyz from Joel Kite here. Now, I think I may have seen this before, but maybe mentioned it on the Refuel, but I'd forgotten about it until now. But zkRollups.xyz is basically kind of a directory for the zkRollup ecosystem that lists all the live apps and technology. So you can see here, obviously ZK Sync, Starkware, Polygon, Loopring, and then all the apps and things like that are here as well. So ZK Swap, Argent, Paraswap, Gitcoin, all the ones that are integrated. So this is a directory if you want to go check out what you can do using ZK Tech today. This website's for you. I'll link it in the YouTube description. So a huge bit of news out of Coinbase and Compound today. So starting today, Coinbase is allowing customers to earn interest on their DAI powered by the Compound protocol. So this is kind of like the DeFi mullet or like the Ethereum mullet. I think it's called the DeFi mullet that the bankless guys call it, playing out where it's DeFi in the back and kind of like CeFi in the front, because obviously Coinbase is CeFi, centralized finance, but they're offering their users a super easy way to get a very nice DAI yield through kind of like their Coinbase app here. So you can see a little kind of like GIF animation, and it's all powered by Compound in the background, which is obviously a DeFi app. This is super, super awesome because you can see here the APY for DAI in October fluctuated between 2.8% and 5.3%. I know that may seem relatively low, but this is kind of like just a Compound rate. Like this is not kind of like putting it into Convex or putting it into Yearn or whatever to kind of get a better yield there, and obviously taking on a bit more risk. This is just a kind of like a vanilla comp yield. And guys, like this yield is much better than what you can get in a traditional bank account. Like I'm pretty sure the high yield account in the US right now is 0.4%. So even if you just go to the lower end here of 2.8%, that is a massive improvement. That's like a 7x improvement over traditional bank with, probably a little bit more risk because you're putting it into a DeFi protocol. But I think that Coinbase would still offer some sort of protections here and take on and bear a brunt of some of the risk. But this is really, really cool. So this is available in over 70 countries, including the UK, Germany, and Spain. I don't think, it's not available for customers in the United States because Gary Gensler from the SEC is protecting you guys. Sorry. I don't know if it's available in Australia. We can't even sell using Coinbase. So our Securities Commission is protecting us even harder than you guys or something. But still good for those people in the supported countries here, but unfortunately not available for US customers. But I mean, the funny thing is that like, the DeFi doesn't discriminate based on kind of like countries because the smart contracts can't. I know with DYDX they don't let US users kind of use the protocol, but you can get around that with a VPN. It's not hard. But like Compound, for example, and Uniswap and things like that, they don't kind of like enforce geographic restrictions on the actual smart contract level or anything like that. So you can just go, you can just go get these APYs no matter where you are if you're just using DeFi directly. And that's kind of like the beauty of it. But if you want something just like super simple to earn a yield on your DAI, you can use Coinbase, obviously. But I think pretty much all of you or most of you listening to this are probably not going to use something like this because you're more involved and you probably don't even want to hold dollars. Like, honestly, I know that I'm saying this yield's much better than the TradFi system. But like for me, like the way I look at it, if you had kind of like had stable coins at the start of this year, say you had like $10,000 worth of stable coins at the start of this year, and then you put them into a stablecoin farm. Let's say you average it out and you've earned like a healthy 10% on that, right? For the whole year. Okay, you earned $1,000 for the whole year on that 10K. It's low risk and everything like that. You just put it in a nice low risk farm, probably something like mStable that offers you kind of like a 10% yield there. But then I look at kind of like, if you had put that $10,000 into ETH instead, you would have been much better off because ETH was what, like $700 at the start of the year or something like that. And it went up to, even at current prices, if we take the current price of 4,100, it went up kind of like 4 or 5x there. And probably more than that. I'm screwing up the math here, guys. But it just went up a lot more. But obviously you're taking on more risk because you're holding a volatile asset. But I just personally don't want to hold much fiat on my balance sheet. I want to hold lots of crypto because lots of ETH specifically because it's just a much better kind of like risk reward here. And that's why I think this isn't going to appeal to us kind of like degens. It's definitely going to appeal to the normies though. This or their bank account. it's a no-brainer, really. It's a no-brainer, I think, for most people. So really, really cool to see this. A bunch of other stuff to get through. So Clinton, the CEO of Slingshot today, announced that they have raised a $15 million Series A led by Ribbit Capital with participation from Framework Ventures, K5 Global, Shrug Capital, the Chainsmokers, the DJs, Electric Capital, and who's this? Austin Rief, who is the CEO of Morning Brew, and a few others. Now, for those of you who have been listening to the Refuel for a while, you know all about Slingshot because I'm a seed investor and I've talked about them before on the show here, but they're a kind of decentralized exchange aggregator platform that's live on the Polygon POS chain and on Arbitrum right now, with Optimism coming soon as well. So congrats to them on the raise here. I'm super excited to see them kind of like kicking goals. They actually evolved out of dex.ag for any of the people that remember this. This kind of like spun out of the DeFi Pulse ecosystem, and then it became like a fully fledged app in Slingshot, and they're growing. I mean, you can see their growth stats here. Over $2 billion of trade volume, 1 million trades, and 100K plus unique wallets so far that have interacted with the protocol. So great to see that. Congrats to the team on the raise. So the Fly product, the flexible leverage index product, has landed on Polygon, the Polygon POS chain. So it's the same kind of, I guess, like as the Fly products on Ethereum L1, but obviously with near zero gas fees. So the ETH 2x Fly is now on the Polygon POS chain here, built on top of Set Protocol, which has been deployed to the POS chain, and Aave. And you can see Set's announcement here that the kind of like supporting the Polygon POS chain too, which is awesome to see. As you guys know, I'm an advisor to Set. I used to work there full-time as marketing manager there. Great to see them shipping and kicking goals. I want to see them everywhere. Like, I'd love to see Set on like Optimism and Arbitrum and all these kind of like other places, and I'd love to see Index Co-op there as well, because I think that shipping products for, as I mentioned yesterday, Index Co-op's strong suit is shipping product, and they need to keep doing more of that, I believe, because that's how they stay ahead of the pack. So mStable has introduced a thing called the emissions controller today. So what the emissions controller does is it moves the weekly distribution of MTA liquidity mining emissions on chain, determining the distribution of MTA to vaults and other recipient contracts via votes on dials by MTA stakers. So this is obviously all controlled by governance, and you can kind of like see that governance is going to have the power to control kind of like the emissions, and you can kind of like see here MTA stakers will vote for the distribution of MTA rewards to designate recipient contracts, and the objective of the emissions controller is to further decentralize mStable and hand over control to the MTA token over the mStable ecosystem. This is really, really cool. I mean, as you guys know, I've been an advisor to and an investor with mStable for a very long time. I mentioned before how they've got some really great safe stablecoin yields going on, but I think that this makes a lot of sense because the MTA liquidity mining emissions has been going on for a while. It's kind of like out there to try and kind of like distribute the tokens to a nice set of people, but also MTA being kind of like a stablecoin yield aggregator. I mean, not really, but that's like one of the products that they have. They definitely want to be able to kind of like compete with these other mechanisms that use things to bribe, like, you know, all about the CRV and CVX bribes and stuff like that are going on in order to get the most out of the yield that they're getting from Curve. I think that's what, you know, the MTA stakers can do as well, is that they can kind of like vote and say, okay, let's put more MTA rewards on this pool so we can buy, you know, and let's buy out more of this so we can get more of the yields from Curve and stuff like that. So cool to see this launched by mStable today. So David Mihal has a new information site out called moneyprinter.info. So if you go here, you're able to see how much each of the kind of like protocols are paying to grow, as David puts it here. But essentially, this is their issuance rate. So you can see at the top, I mean, Ethereum's actually paying 4.07% issuance right now, which is $55 million a day of issuance, which... Okay, I'm going to take a step back here because I'm going to paint another bullish picture for you guys. You know how I always talk about the merge, and I always talk about that 80 to 90% issuance reduction? This is exactly what I'm talking about. Now, this doesn't show net issuance. We are way less than this if you account for EIP 1559. We're about 50% or even more than that less than this. So you can discount this to 2% issuance rate, effective issuance rate with the burn, which means new daily issuance, if you net it out, would be about $22.5 million a day here. That's still a lot of ETH for the market to absorb. Now, do your 80 to 90% issuance reduction with the merge, keep the burn in place, and you have negative issuance. You have negative issuance in ETH, which means you have negative issuance in dollar, which means daily issuance drops to the bottom of this list, guys. Like literally the rock bottom. It goes from the top, which it is right now, issuing the most of any protocol, to the bottom, right? And if you kind of like net it out, of course, it would already be probably like second. Bitcoin would still be first, which is pretty funny when you think about it. That Ethereum is kind of like more deflationary than Bitcoin right now because of 1559. But then with the merge, it just becomes like even more. And you can see here other networks like Solana. I mean, this is the issuance rate that they're paying to stakers, which is 7.27%, which is currently $18 million a day. Solana is paying a lot of money for this. Like it's crazy how much they're paying in issuance. And I don't know what their issuance schedule is, but I don't think they have a reduction in issuance. I think they have a burn mechanism, but for them to get to the same level of kind of like money that's being burned, on Ethereum, it would take a very long time to do that. Polkadot as well. I mean, they have an 8% issuance rate, which is pretty high, almost $10 million, because it's obviously measured in their native token. And, you know, I actually looked at the DOT chart the other day, especially against ETH. It is not doing too hot. And I think these things do play into that, guys. I think these extra issuance, I think early investors, I think people just kind of like seeing different ecosystems not delivering on what they promised is putting a lot of downward pressure there. Like Ethereum is eating $55 million of new issuance a day, netted out, it's 22.5 million, but it's still going up over time. It's because of the fact that people want ETH. Like it's an in-demand asset, right? Whereas Bitcoin, I mean, Bitcoin is kind of like not doing too hot. I mean, ETH is gaining on Bitcoin. I know against USD, ETH and Bitcoin are basically kind of like dancing around each other right now, but I think there's a reason. This is a major reason why ETH is outperforming. And then you can see there's a bunch of others here, like Osmosis, which is an AMM protocol built using the Cosmos SDK. They're paying 123% issuance rate right now, I guess, for liquidity mining. Convex at 53%. Cardano has a 2% issuance rate, but they're still paying $2.5 million a kind of like daily issuance here. And then you make your way down the list. Dogecoin still has 3.7%. And then, yeah, there's a bunch of other apps here. So great little site from David. But the thing is with this site is it requires a lot of context, because with Curve, for example, you have the issuance rate, but then you have the issuance rate net of how much CRV is being locked up forever into the kind of governance contracts, into the DAO, I should say, which is actually a lot. And then and as I said, with Ethereum, you need to net out the burn. Then there's all the esoteric stuff like locked tokens and tokens that haven't moved in a really long time and kind of like stuff like that. And then same goes for a lot of these other protocols too. And then you've got to account for like liquidity mining. Yeah, it's just, I mean, it's a good kind of like surface level website, but I did mention to David that I'd love to see more context, especially for Ethereum around the burn. And you can just put that context in this box here and then kind of like say, okay, this is the net issuance rather than just having it like this, because it misses a lot of the very, very important context. But still, a really, really cool site from David here. All right, last couple of updates. I know I've gone over time. So I missed this yesterday, but Block owners waitlist is now live, and they also announced a fundraise. So this is a kind of a Aussie-based project. They've raised $6.4 million to do what they say is bring DeFi to the masses. Now, this project has been founded by former Synthetics, Synthetics co-founder, I believe, or someone who worked at Synthetics here, Jordan Momtazi, and also Charlie Caraboga here, is part of this as well. So they're both the Block owner founders. As I said before about kind of like the DeFi mullet, this is DeFi mullet as well, where essentially they're trying to kind of like be an interface that sits on top of the DeFi protocols and offer yield to normies, really, at the end of the day, right? Like you definitely, as I said, targeting normies with these sort of kind of products, not us degens who can just do it on our own. But this is what's required for mass adoption. Like, I think people are deluding themselves if they think that most people in the world are going to do what we do when we kind of like degen in DeFi. Self-custody is amazing. Most people don't want to do it, guys. Like, seriously, most people don't trust themselves to do it, which is fine. So giving them these options where they can use a more centralized service but still access the wonderful world of DeFi, I think is the better path forward. So really, really awesome to see this product. And you can sign up to their waitlist at blockowner.com.au. All right, last up is a new website from Frontier here. So if you kind of like see in the video, you can kind of like see Frontier is the front seat to crypto and DeFi, as they call themselves. You can create a wallet and buy crypto with them here, and you can kind of store and receive crypto. I mean, I just really like the website. It looks really, really cool to me. But essentially, this is kind of like another normie-friendly kind of thing that's going on here with a wallet and everything like that. I think I've spoken about them before, but again, this is what we need for mass adoption. This is kind of like, I guess, an Argent competitor, I would say. They support, obviously other networks and Ethereum layer 2s as well. But I think like it also works with other wallets. So you can actually connect with your other wallets like Argent and kind of like I'm Token and Gnosis and stuff like that as well. So yeah, if you haven't checked out Frontier, definitely be sure to do so, because it looks like another cool kind of like wallet that you can play around with. But in saying that, I sometimes kind of like think, how many wallets do we need? Because I mean, I only use kind of like, I don't even use mobile wallets really, because I'm on my desktop all the time. But most of the time I'm using kind of like MetaMask with, obviously a hardware wallet pass through, whether that be my Ledger or my Lattice. But like for a mobile wallet, I don't really do much on my mobile wallet. And if I did, right now, I'd probably pick Argent because I'm used to it, especially with their layer 2 integrations going live. But Frontier looks like a pretty cool kind of like another option there. Rainbow Wallet's also really, really cool. Coinbase Wallet's actually pretty decent, but I just don't use them enough to kind of, I guess, have a favorite yet. But still, if you're into your mobile wallets, definitely go give Frontier a kind of like look here. But I think on that note, that's going to be it for today. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give the video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all next week. Thanks everyone.